goal for today's lesson is see how price runs into imbalance and seeks liquidity on daily time frame. Excuse me for any sort of background noise. So yeah, just bear with it, and we'll make sure that whenever there's a market structure shift, it needs to happen both happen in both underlying and benchmark asset, right? Which in this case will be the underlying is euro and the benchmark will be dollar index. That's all I'm gonna uh, you know these are the only two goals. I think I had scattered a lot of uh, goals, and I just want to make sure that I segregate them and do them systematically. Yeah, these are the only two goals. Yeah. All right. So, assuming that this orange line is the starting day for us, and this time period in the box is the look back period. This is a 60-day time period, and we'll be projecting the next 20 days. All right. So all right. So yeah, that would be the case. All right. Let me open dollar index as well. I'll just go here. I don't know if I can. Man, the number of charts that I've opened right now is insane. I'll just go to some other layout. Hmm. 4th May 2021. There we go. All right. That's 4th May 2021. 4th May 2021. The look back period for this will be this. All right. There you go. Now first of all, let me just go and I won't draw any sort of PD array right now. All right, I'll just see what's price been up to. Institutional order flow up until this point has been bullish, but we see a market structure shift happening over here after price went into imbalance to rebalance it. the price was completely rebalanced, and that's why we saw, I mean, not completely, there's still slight imbalance left. So, but still we saw a market structure shift happening over here. Now what's up over here? The market structure shift over here was, this happened on 28th April, Wednesday, 28th April. Yeah, so we see a market structure shift happening over here as well. That too after filling up a gap. It still hasn't been filled completely. Yes. So because price earlier ran above this high and came down to rebalance this price, but still there is some amount of job left. In spite of price having a market structure shift, it came down to complete its job. I think it would be fair to say that. So is the case over here. Price came down, even though there was a market structure shift happening over here. It came back up to complete its job. Alright, so it ran into this imbalance to rebalance the price, and then ran above this high, ran above below this low. Okay, so market took it rebalanced the price and took out liquidity. Rebalanced the price, took out liquidity. Now what do we see over here? Once liquidity has been taken out, and this liquidity is an intermediate term high. All right, because this particular high has been, it has run into an imbalance, and it also has a short term high and a short term high to the left and right of it. All right, and intermediate term low or short term low, but there is no short term low over here. Alright, so this is the one that we were talking about. Short term low, intermediate term low. Price took out the intermediate term low and then consolidated a little bit and then went up, leaving a fair value gap. Alright, and ever since been going up over here. Took out the intermediate term high, consolidated, came down, took out the short term low, market structure shift. So in this case the market reversed from market reversed from market reverse by taking liquidity from intermediate term high. It and it was followed by a market structure shift on the daily time frame. All right, this over here by taking out short-term low. Market structure shift, short-term high was taken out, came back down into this bearish order blocks mean threshold. And then rallied. Alright. So a market structure shift happened by taking an intermediate term high, an intermediate term low. Okay. Alright. Price was bullish over here. In this case, price went up all the way above this high. This high is a short-term high because I don't know if you would qualify it as a short-term or intermediate, because it has, even though, run within an imbalance, but that imbalance has been completely filled in. Alright, so or would it be classified as a short intermediate term high? Intermediate term high, price went down. 11th November. Price run into an imbalance, so an intermediate term low, but because intermediate term low should have a lower low and a lower, another lower low to the left and the right of it, and we can see clearly that's not the case over here, so it went up. Okay. So is it that every time price takes out an intermediate term low or an intermediate term high followed by a market structure shift in both underlying and the benchmark, that we see market reversing? Alright. The price tried to go down below this short-term low. It took out this particular intermediate term high. It is a short-term high to the left and the right fit, right? But because this low failed to go below this order block, so we can still stick to the bullish bias. Price went up, left a lot of gap, came back down, filled the gap. I mean, not technically, it did not fill the gap though. Partially filled the gap, went up, came down, took out this low but did not close below it. went up again. Alright, price went up. What's up with euro? Price came down, took out this intermediate term low. Over here it even failed to go above this high, so we can still stick to, because our this high was not broken and it was not confirmed on the underlying asset. Alright, so we can still stick to the bullish bias. You still stick to the bullish bias. Price came down. Price came up. It went above this high, and this high. So a lot of buy side liquidity taken. This high, and this high. Alright. What I am still not clear of is how do we decide how many number of highs or buy side liquidities will be rated before the market reverses, and vice versa. I mean, when the price is coming down, will it reverse after this high, after this high, after this high, or after this high? That's what I'm still not clear about. But if you consider this down candle before the up candle as an order block, price came into it, and then a fair value gap was taken out. Boom. Will this qualify as a market structure shift when the price was aggressively going towards a level of support and then it aggressively reverses? Leaving fair value gap on both the ends. Let me just mark this down. Price went to a level of support with fair value gaps on its way, and aggressively leaving fair value gap in the same place. Was this fair value gap used as a support later on? When the price did go up, over here. Price went up, came down. It left a fair value gap over here. That's a gap right there, and a gap right here, and it had a gap up opening on this day, so there's a lot of gap left. So will this be counted? And also this is from the order block. Price came down. Okay, so to recognize a market structure shift, either a short-term low should be taken out, short-term low, short-term high should be broken after liquidity taken from intermediate term high, intermediate term low, or fair value gap violated, leaving a fair value gap in the same place on the opposite direction. Alright, so what do I mean by this is that either there's a short-term low that's violated, for example, you know, over here price went okay, price went below this low over here. This is short-term high to the left and a short-term high to the right of it, so that's an intermediate term high. Price went below it. The low of this candle is 89.22. The low of this candle is 89.20, so it went 2 pips below that candle, below an intermediate term low, came back up, right, came down again, and then went up, took out this short-term high out. So that's a market structure shift. That's one criteria, and I could be completely wrong. I'm just trying to be vocal about my observations so that I can learn from my own observations. Of course, those observations are built on ICT's work. So that's the first criteria. The second criteria is that price goes above an intermediate term high, like over here. That's an intermediate term high because it has run into an imbalance. Alright, it went up and it left a lot of fair value gap, so price was aggressively going over there. That's a lot of good gap up openings, right? And as price was going up, it left a lot of gaps, and that gap was countered by leaving another gap in the same area, a fair value gap. In this it's a gap up opening, but in euro it's a fair value gap on the opposite side. Here we had a gap up opening in dollar index, but we can see a gap over here. Alright, let's see, let's go ahead. Sorry folks, I had to go somewhere. Alright, so going ahead, the goal of this recording is to see why and when does price run into liquidity, runs for liquidity or runs into imbalance, and what causes the market to reverse. Alright, so price came down that's the equilibrium. Price came down to equilibrium. Alright, that's a fair value gap, that's a mitigation block. Sorry, that's an ICT breaker. That's an ICT breaker. That's an ICT breaker, and then that's a fair value gap again. Alright, the price came down, so a market structure shift happened. First of all, a market structure shift happened over here. Ever since then, these are the places of liquidity. We're pretty sure that that's where the price will go to, but that's what it did. So once a market structure shift happens, mark the nearest liquidity in the direction of the market. After mark liquidity, the direction of market or order flow. Alright, so this is the liquidity, and it will most likely go and fill in this imbalance, and that's what it did over here. Alright, right immediately after the imbalance was filled, we saw that how this bullish order block, which also has a confluence with this breaker, was respected for a while. Price came down, went up. Right, it failed to fill this imbalance, it went up, so this is an intermediate term high. What's up with euro? Price went up above these. After the market structure shift, it went above these equal highs, filled up the imbalance. Alright, respected this breaker, which also has a slighter confluence with the order block. It retraced a bit, filled out this imbalance. So now this is an intermediate term high. Alright, retraced a bit, went up, filled out this imbalance, and then there is liquidity over here, and then there is an imbalance. So whenever there is a liquidity followed right after the imbalance, price tends to move towards it. Liquidity right after imbalance. Nice. To high, low, right. That's probably because price has a tendency to fill up this gap and seek the liquidity. So it acts like a double attack. Double trouble. Alright. This price came down. It came down 1963, 9068. It came down on Monday. It was a silent and a sideways day, so it went up slightly, came down, took out the liquidity, did not fill the gap. Went up again. That's an intermediate term low. So it did take liquidity from intermediate term low. Went up, had a market structure shift. But then it took an liquidity from this intermediate term high as well. The high of this candle is 91.42 and the high of this candle is 91.43. So right after the intermediate term low was taken out, price shown some level of reversal by causing a market structure shift, but because there was an intermediate term high again countered by the market, it went again to the opposite direction, making sure that this imbalance will be filled. Okay. Went down, as it, even though institutional order flow is bearish, none of the bearish order blocks have been violated. Even over here the price did go above it, but then eventually it came down right after seeking the liquidity from this bearish order block, right? Came down. So we have to stick to the bias unless until I see market structure shift happening after the liquidity has been taken from an intermediate term high or low. I have to stick to my bias. All right. Came below this, took liquidity from this rejection block because that's long wicks with equal bodies. All right, went up, and we are still with our bias, which is bearish. I want to see how price one thing I want to see over here is how price was moving in this area and in this candle with respect to the 2022 model. Came down, took out this intermediate term low, price came up, took out liquidity from intermediate term high, retraced, took out liquidity from this, retraced even after a market structure shift, but then again took out liquidity from here, which is an intermediate term low, and then came back, causing, well, it did not cause another market, well, it did, right? and then this order block was pretty much respected. Price went up to liquidity from this place, and once an intermediate term high was taken out, this is also an intermediate term low. Alright, once this intermediate term high was taken out, price came down, caused the market structure shift, came down again. So two consecutive lows have been violated. These bullish order blocks are being respected. This bullish order block, this bullish order block. Alright, sorry, bearish order block, and then this bearish order block. Just see how beautifully these candles are respecting. So what do I even need to figure out the institutional order flow? I need to see when the last market structure shift happened. Last on both underlying and benchmark. Was liquidity taken out of an intermediate term high or low? Are the order blocks of one side being respected? Alright. In this case, because price reversed right after taking liquidity, caused a market structure shift on this side, so we could have still stuck to our bullish bias, but also the intermediate term low needs to have an intermediate term low to right and left of it, but that's not the case over here. So we can see how the market is being pushed up, right? This intermediate term low is lower to this intermediate term low, but that shouldn't be the case. So we know that the market makers want to push the price up. Alright, price came down. This is an intermediate term low as well. It has an intermediate term to the left which is lower, but it has a short term low to the left, but this low should be higher than this low, but it's not. So we can see that the market makers want to push the market down. Holy moly. See the direction of intermediate terms. See which direction are intermediate term high and low being. For those of you who are wondering where did I got to know about this thing, ICT mentioned all these things about market structure in one of his lecture from the 2022 modelship, 2022 mentorship program. Yeah, a market structure shift. Okay, so a couple of things that have when the last market structure shift happened. Was the market structure shift supported by market structure shift? Oh, was the market structure shift? Um, was the liquidity taken out of intermediate and higher low? All right. Market structure shift can happen in two ways, which is either a short-term low was taken out or short-term high was taken out, or fair value gaps on one side is violated and another fair value gap has been formed on the opposite side, which overlaps the previous fair value gap. Okay, price came down. Now ever since this area, and as long as we don't see another market structure shift from this low, we'll stick to our buys, which is bearish. So we'll aim for this low, and this low also has an intermediate fair value gap over here, so we know that the price will go over here and it will suck into this, and then it will go for this low, fair value gap, fair value gap, fair value gap, and that's exactly what happened over here. All right, now moving forward, this liquidity, these equal beautiful lows, insane. Dollar index price went below, market structure shift happened, liquidity was taken out from intermediate term low, went up, this short term low was violated, price came down, it refused to violate this bullish order block, went up, took out this low as well, went up. Now this intermediate term low was violated and we did not see any other intermediate short term low being taken out on the opposite side, which is that this short term low was not taken out, this low was not taken out. Alright, so we'll stick to our bullish bias. Also the fact that this is an intermediate term low. Alright, this intermediate term low and low, but in euro 4th June, this intermediate term low, that's an SMT divergence. Did I just spot one SMT divergence? Look for SMT divergence. So we see that's high and that's a low, but over here that's a lower low and that's a low and a lower low. Interesting. All right, price went up, targeted this low, sorry, this high, then this high, this gap was filled in, and then these equal bodies with a lot of liquidity over here, but over here, that's the one, I guess. 9th April, yeah, 9th April. All right, price went up, since a market structure shift happened here, here, came down, started going back up, price came back up, started going down. What will be the, now the external range liquidity is here, and we would expect the price to go below this, and that's exactly what happened. External range liquidity over here, price went above that area. All right, on short term basis we can expect the price to come down as it did over here, but it still did not go below this low. Price did not go above this high. On the short term basis we can expect, and this, could this be defined by PD arrays? Price came back to equilibrium. The most recent PD array above equilibrium would be what? I do not see any gap. Is there any breaker over here? June 21st June, 21st July, 25. Right. What do I see over here? Mitigation block, breaker, liquidity void, fair value gap, nope. Order block, yes. And then there is rejection block as well with, you know, long wicks. The price did not even go to the order block over here. It reversed from this high. All right. Alright, price did eventually go above this high. I'm wondering what is it that caused the market to come below. Is it the gap down opening? Right, this gap down opening can be referred as a fair value gap, and it refused to close. Price came down right from here. First it came down from this block. We are going to stick to oops, it went up for the liquidity again. That's an intermediate term high. Alright, all this while price came down. That's an intermediate term low, so this low is extremely important. That's an intermediate term low as well. So we see that the market is trying to still push. The market makers are still trying to push the market up. As soon as price goes up, the high it came down, right, formed an intermediate term high here, took out this intermediate term low, market structure shift happened here. Alright, came down, so liquidity was taken out. Alright, the market intermediate term lows are still being pushed higher and higher. It's an intermediate term high, price came down. I would have been cautious over here because that's an order block. The mean threshold of this order block has been very much respected. Went back up, took out this intermediate term high, so we'll stick. How long or how far do we have to go for a particular bias is the main question. Market, there was a clear market structure shift over here. Alright, after the liquidity was taken out from this high, this is also a clear market structure shift, right? What is it that happened over here that did not happen over here, because of which the market is still going up, but it did not went down further in this from this area. What could be happening? The intermediate term high was taken out, or the short term high was taken out here, short term intermediate term low has been taken out here. So there has been a market structure shift without a doubt. Alright, but over here there's another thing that we can notice over here. That's a level of support. Price goes above, comes down and leaves a fair value gap. So the market structure did happen here, right? But it's just that that was on a very short term basis. It lasted for 9 days, 8 days. Alright, this gap was filled. See, these strong lows are still not being violated. Alright. One could have expected the price to go within this gap, this void over here. But it continued to go up. Now I don't know why and how does someone decide this as to where the market could go. Alright, but the look back period, if this is where we are right now, this is what the look back period will be. If I refer to alright, if I refer to the last 20 days, price went up, came down. We see fair value gap over here. It was filled. What else do we see? We see a low over here, which is a rejection block. Price went up. It left a fair value gap on the opposite side. Went up, came down. This fair value gap was respected and went up again. I am still not able to figure out how do I proceed. So the price went up, I would aim for this external range liquidity, and that's what happened over here. All right. That's an order block right at the equilibrium, and we see price go up. The price went above this high, this high, this high, and it would want to suck into this gap, and that's what it did. Now it wouldn't go right after it was sucked into this gap. It consolidated for a while, came down. Considering that the quarterly shift happened within 3 months, right? These 3 months, price came down, came back up, came down. We've been consolidating. How do I even proceed? Or am I just overthinking about useless things? Think. Price went for this. See over here, this is a legit market structure shift. It's just that it did not last for a very long time. Maybe I am right. Maybe it's just market structure shift and a downtrend for a very short term basis. Also considering that we are in a deep premium, right? The last, over here we are in deep premium, right? This is where the equilibrium is. All right, we are in premium. We have taken buy side liquidity. This a lot of buy side liquidity has been taken out, right? Market structure shift happened. It was deemed, it was bound to go lower, right, for some retracement. It could have or could not have gone below this low, but you know, all right. Going forward, came down, price refused to go below this order block. Intermediate term high, price came down from a level of support. It left another fair value gap. It's a double confirmation of market structure shift again. Went up, it will go for these equal highs, and that's what happened over here. And as soon as price went above this high, it retraced a bit. This retracement was within this order block. Price went up, was again very choppy, and would go to fill in this gap. And it was a sudden spike up until that point. Boom. Okay. So what did all happen right now? When a market structure shift happens after a liquidity raid, it would go to fill in an imbalance. When liquidity is swept from intermediate term high, followed by a market structure shift, price will run into imbalance. Price will run into so when the liquidity was taken out, it came back into this imbalance, right? Went up again. Market structure shift happened. Now this liquidity was taken out from an intermediate term low, and then a market structure shift. What is the next thing, next place that we would aim for? This high. All right, and this high, and we'll stick to the buys unless we have another market structure shift. That's a low, that's a high, that's a lower low. So that's again an intermediate term high. this fair gap has not been completely violated. So we'll stick to the bullish bias. I mean, it did run into an imbalance. I mean, this. Okay, but I think we could say this. I don't know. This intermediate term I was taken out, and then short term low was taken out. So we could be bearish for these days till this order block. Alright, because right after intermediate term high has been taken out, price ran into imbalance. Holy moly. Price ran into an imbalance. And then retraced. Went up, filled that entire gap, liquidity void on this end. Now what do we have over here? Went up, filled, that's an ICT breaker. The void was filled. The void was filled. Low. So low, intermediate term low, low. High, low, 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 low. That's an intermediate term high. That's also an intermediate term high. So you can see that these intermediate term highs are in one direction. You can see the market might want to retrace a bit and go into this imbalance. So the conclusion that I've come up with, That's it. That would be enough for right now. I'll come back in some time.